Hello, today we're going to be talking about this question in your essay packs with reference to a country of your choice. Discuss the benefits of a country entering a trading bloc or entering the WTO, the World Trade Organization. So either of those will have the same kind of answer. We're going to try and follow the same sort of pattern that we did in our previous essay. And in the previous essay, we used a specific diagram, the tariff diagram, and then we used our employment or unemployment and inequality as our next points. In this essay, we're going to do exactly the same thing. Let's keep it the same and try and plan all our essays, as many as we can, in the same way to get ourselves that feeling of sort of consistency. Can you, first of all, pause the video and think about, in a minute, what we need, what you're going to plan. There are some facts and ideas on here. You can pause the video on each of these things and have a look around. Quite interesting things about Mexico and what it's specialized in and the advantages of manufacturing there, and some basic facts there as well, which you may be able to use in your plan. Okay, coming back, hopefully you've spent some time planning and thinking about it. Definitions and key points. We want to first of all make sure that you understand what a trading bloc is, and I would probably start off by saying what an FTA, a free trade association, is. You may write about a customs union as well. You have to decide that, but in this essay, we're going to be looking at the USMCA, so the US-Mexico-Canada Agreement, which replaced NAFTA a number of years ago. Something, as we said in the previous essay, which was so important, is to get your countries right on the diagram. So first thing we're going to do is make sure that we've got the US as our domestic market. Now you could do this the other way around, but I think it's easier to talk about it this way. We know that the US is a producer of cars. We also know that Mexico, having had a free trade agreement with the US, a lot of car production, for example, BMW, General Motors, have moved their production to Mexico. We can see that as our example on the axes as cars. So immediately there, we are seeing straight away, Mexico being the world country, we're seeing straight away that you've got great application, and this essay is going the right way. So the first point, as we did before, in our previous essay when we raised a tariff, this time we're going to lower a tariff because Mexico is going to enter into this trading agreement. You want to start by saying where the situation was. We were at the green line. We had an overall equilibrium of Q2PW plus T. That was the overall number of cars which were sold in the US market. Get it the right way around. And we also know that Q1 cars were supplied by the US from mainly Detroit, who were a car manufacturing area, and I shouldn't be circling that now. And Q2 to Q1 are from Mexico. As a result of the fall in the tariff, you're going to talk about the shift here, and the S world curve, or S Mexico plus tariff curve, shifting down to the red line, we're going to see an increase in the market size. And so the theme for all of this paragraph is something called trade creation, because the increase in the market size, our expansion along this demand curve as a result of the fall in price, is that the overall market size increases to Q4 at a lower price PW. We've got that there. We know now that the overall American production, say, for example, out of Detroit was, Q3 there. And we also know that the Mexican production is now Q4 minus Q3, all of this amount here. And so therefore we can say it's beneficial to Mexican producers, it's negative for US producers, with A plus B plus C plus D going to American consumers. A from the US producers, B from efficiency gains, C from US government revenue, and D from the increase in the market size. And that's quite interesting. You could give a little bit more context here as well, and you could say that similar things may well be happening, for example, from these areas as well. Electronics, automotive, appliances, medical devices, textiles, those sorts of things. Right, well, we want to talk about trade diversion, and we want to talk about a third country. So let's now bring in another country, China. Now, China, we may assume, has the comparative advantage in the production, but possibly not of cars, but certainly of things like textiles, for example, or electronics. Now, as a result, if they have a comparative advantage in those goods, they have a lower opportunity cost than Mexico, but the US has tariffs on China. We know that from our previous video, they are running at around about 20% after the previous trade war. Now, if, as a result of the USMCA and Mexico entering this trade agreement, we see that Mexican-US tariffs fall, then we can see that suddenly Mexico may well therefore gain an advantage of not having to pay a tariff over China. And we may see something called nearshoring. Nearshoring, where where Chinese production might well move to Mexico from a more efficient country to a less efficient country. That is a negative. It's going against the theory of comparative advantage, and therefore all trading blocks can be evaluated by the fact that yes, they are good for trade within the bloc, but they also disrupt the theory of comparative advantage with trade outside of the bloc through the concept of trade diversion. What we could further say, though, is that, well, for some of these things, actually that might not be so much of a negative. We know that transport costs are high, so for things like automotive industry, it's actually going to be a very good thing. They're big and heavy things, and so therefore transporting it from China will be a problem, and that isn't taken into account when we're talking about the theory of comparative advantage. It's also possible that Mexico may, in the long run, gain FDI. Inward FDI to Mexico, and that may well promote external and internal economies of scale, which may then drive comparative advantage in the future. That's a complex argument, and you may not have time to do that, but there's a lot of argument there about whether trade diversion is a good thing. The theory of comparative advantage suggests it's not, but the long run investment and possibly transport cost issues may well mean that nearshoring makes sense in the context of USMCA. We can then again start to link from our previous diagram, as we did in our previous essay, because we know that as we went from Q2 minus Q1, that was Mexican production, that production went up to Q4 minus Q3. So now is the important bit to get right. Instead of talking about the US, we now know that because we're arguing for, we're saying that employment will rise. If I use my first diagram, I can then switch over to talking about Mexico, which is quite clever because I've just said that production of Mexican goods over there, which links to this diagram as exports are rising for Mexico over here, due to the domestic US market. That's going to shift AD to the right. We can talk about exports as that factor, and many of you are not using exports at the moment. You're talking about consumption or other things. Exports are what's changing for Mexico. But driving efficiency and comparative advantage, we know that specialization is helping us also through FDI, as say BMW invests in a factory in Mexico. That's also shifting LRAS out as well, creating economic growth. Look at all these nice chains of reasoning here, creating a derived demand for labor and lowering cyclical unemployment in Mexico. That's our for. Now you're going to have to do a bit of mental gymnastics and say, well, where is the structural unemployment then? You're going to then have to switch back on yourself and go back to the USA. And if we go back to the USA, we know that structural unemployment is an issue because it may well be that if those workers who had lost their jobs in automotive industries were occupationally immobile, then they may not be able to be redeployed in the areas of comparative advantage that the US has. But you may also argue against that. We know that, well, hang on, for example, is it the case that we don't have other employments? Well, 40.1 billion of US agriculture exports to Canada and Mexico. So, well, clearly farmers are doing well out of this. Maybe there are farming jobs which may be low skilled as well, and also 300,000 jobs supported by agricultural exports. And we can see that those exports still to Mexico and Canada are high. You may say, well, actually, that's fair enough, but there may be geographic immobility. I might be able to become a farmer, but I'm located in Detroit, not in Nebraska. I'm in the wrong place. So it may well be that could be an issue too. You can really get into that. And interestingly, we know that, and I'm just trying to find where it was. I think it was in here. In order for the Democrats to agree to the USMCA, in this point here, the factories in Mexico must be inspected to support new labor laws in Mexico, which means that actually Mexican labor is therefore going to be more expensive. They can't deregulate, and therefore they may not have this same level of challenge to US industry that we may otherwise have seen. So lots and lots of things going on there. Finally, our effect on inequality. We don't have time to draw a Lorentz curve, but that's what you might have drawn. We want to talk about those prices. Prices dropping, and we can go back to figure 1 and we can talk about the fact that prices dropped from PW plus T to PW, and many of those goods may well be cheap goods. The fact that automotive industry in the US is providing cheaper cars, if low-income consumers are buying those as a greater proportion of their income, then that has a disproportionate impact on the poor. And when we looked at those other goods like medical devices, for example, that could be really important as a driver of increased consumer surplus disproportionately falling on the poor. If the tariff was regressive, removing it has a progressive effect, which is a nice way of putting it. It could also be that you could drive employment wherever you are driving employment, and you might comment on the inequality between Mexico and the USA. Mexico is now going to catch up through the greater capital and investment that we're seeing there, and as a result you're going to see increases in MRP, increases in the wage rate, and therefore Mexican workers will be less disadvantaged and will be therefore seeing increases in their wages, reducing the Gini coefficient. You may also, and you may then link to the Mexican catch-up growth as a result. You could also link to in the fact that the USA, other jobs are created, and people who didn't have jobs before may be able to be redeployed into areas of that they have a comparative advantage in. On the negative side, though, we know, that there's going to be inequality for those people who are structurally unemployed. So we could go back into that and say if there is structural unemployment, for example, then we're going to see issues there. We may well see that wages fall in certain American employments if you see that Mexican firms are very competitive. US firms may have to reduce their wage rates as a result to compete, and as a result you may see lower wages for the poor as well. Overall, in judgment, well, the overall effect of a country joining a trade agreement has to be the relative strengths of their economy. For the USMCA, because it's got a large internal market, it's a huge market, you're going to see very, very big impacts on FDI, on exports, on specialization, and they are going to drive significant growth within the bloc, and that is exactly what it has done. You may also say that the short-term effects may well be negative if in the case of certain impacts on certain industries within the US, depending on the relative comparative advantages. And that could be, for example, Mexican comparative advantage in cars. You might also say in the long run, though, it might provoke the US to move into other areas, and if you have the appropriate government support for education, for example, occupational mobility, and geographic mobility through infrastructure, you can redeploy those workers, and as a result, the long run effects will be significant growth, but also possibly higher levels of wages and salaries for those people who may have lost their jobs as a result. Hope that makes sense. Please do rerun over that if that was a little bit quick at the end.